Okay, Assalamualaikum and good morning, everyone. And for today's session, we are going to look at still under Mfrs 116, which is PPE. And today we are going to look at how do we account for derecognition and disposal of revalued property. So what happened here is that the property was first revalued. After the revaluation has been done, maybe after 2 years, after 1 year, the revalued property will later being de-recognized through the disposal. So under MFRS 116, the carrying amount of the property that has been de-recognized, it can either happen on disposal. So you are going to de-recognize, meaning that you are going to exclude from the carrying amount of the PPE. So any gain or loss arising from the de-recognition, you are going to include that either as a gain, part of other income in the profit or loss, and you can also include if there is a loss, you will include that as part of loss under admin expenses. So the gain will be obtained by taking the disposal proceed deducted with the carrying amount, right? Under the revaluation of the asset, if you come across derecognition and disposal of revalued property or revalued PPE, you should also do extra entries, meaning to say that if the asset was previously revalued at a surplus, of course, on disposal, there are still some revaluation surplus balance. So meaning to say that there are asset revaluation reserve remaining balance for the revalued asset. So therefore, under MFRS 116, that balance must be transferred to the retained earnings when on the date the disposal of the revalued asset took place. So all this while you dealt with the disposal of just a depreciable asset that did not go through the revaluation. So this one is through the revaluation, then only it will be disposed. So what you need to do extra here is whatever remaining balance in the ARR that you have earlier had due to the surplus on revaluation. Therefore, that balances must be closed and transfer to the retained earnings. To illustrate that, I'm using this question, yeah, the one that I have put in our Google Classroom, which is our extra practice coming from Common Test FAR270 December 2020. However, I have amended some information here, which is the year end. So I have changed the year end from June to December. I've changed the year end from June to December. That's it. The rest are all the same. The numbers remain the same. So let us look at this question to show you how do we first calculate the revaluation, which is revaluation surplus here, and then how do we treat the derecognition of that revalued equipment, and how do we prepare disclosure note. So the impact of this two transaction, number one and number two here, to the movement of the PPE in the disclosure note. So I have already prepared a template at the bottom here for you so that you can insert whatever amount that should be. And that template already contain the items that you should have included, which are relating to disposal and the revaluation. So let us look at the question first. So you have 1st January 20x5. 1st January 20x5 is actually the date where you acquired the equipment. So if you can draw a timeline, you can do so. Okay, let's say 1st of January X5. So this is the date of purchase. Date of purchase, and you have a cost of the asset, only one asset here, the cost is 3.5 million. And then you are informed that on that date, the estimated useful life of the asset is here, 25 years. So I'm drawing a timeline. And later you are informed as well the initial cost. So this one is the initial cost, the purchase price, and you're also informed on import duty and installation costs. So if you total up that cost, which is the initial cost, you will get 3.5 plus that you get 3.6 million. So that was the initial cost. And then on the date 1st of January 20X8, which is after 3 years. After 3 years, 1st of January X8. You have the asset. There was 1st January, the fair value of the asset was 3234. 3234 is the fair value. 3234 million. So what you need to do is to find out what is the surplus or deficit. In this case, there will be a surplus by comparing fair value with the carrying value on this date. So you need to do that. And you need to find out what are the surplus or deficit. So you need to do this one. So I'm going to show that. Meaning that after 3 years, how much is the carrying value? Then you have it again on 31st of December 20X9. So after 2 years, 31st December 20X9, you have this sentence here. It is being sold. At first, it was being revalued. Now it is being sold. So meaning to say that this is a disposal or derecognition. And the first one here is first revaluation. So you need to find out how much is the surplus and deficit. So here you need to, you will see that the proceed on that disposal, proceed, I put disposal proceed is 2.95 million. And now you need to know what is the carrying value or carrying amount on the date 31st of December. How much? So that you can find gain or loss. And also to find out carrying amount for both, you need to also consider what are the accumulated depreciation. And on this date, 31st of December 20X9, if you have previously had a surplus here, so whatever surplus balances that had arise after 2 years, that balances in the surplus or asset revaluation reserve must be closed off because this is a revalued asset. So the transfer from ARR to the retained earnings must be done. Okay, let's do that. We have already drawn the timeline. So let's just go here. Okay, before you start. Let's look at the working. So there are two set of working that you need to do. You don't have to go detail, but you can just do simple one. But I'm doing this for presentation purpose, so I'm doing it neatly. So number one is for you to find out what is the amount that you need to show here. So bear in mind, in the requirement of the question, always read the requirement. You are asked to construct a schedule to show the movement of movement of the equipment actually. So there was a typo there, I think. Equipment, it just changed that. Equipment, the plan changed to equipment. Have you done that? Class? Class, are you there?
Yes.
All right, Alhamdulillah. So for the 31st December, for 2 years that you need to do. One is this, another word, that one is here. So meaning that you are doing things for this period, starting from here. Here, which is 1st of January 20X8. This one, up until 31st of December 20X9 for 2 years. So for 2 years. So what you need to do is in your template, you have all the space for you to write in. So let's just look at what we have here. So number one, you need to find what is the balance at the beginning of 1st of January 20x8. So if you had recalled just now, I put it side by side like this so that easy for you to refer. Okay, just wait a while. Okay, all right. Okay, so you can see here, these are the details. So I'm going to transfer all this detail into the notes. But before that, take into consideration this is actually involving the recognition. So you have this here, this side. Okay, let's do that. So this figure here, which is on 1st of January 20x5, the cost of 3.5 million, this one will still be the same cost on 1st of January 20x8. So therefore, you will just include that figure here. 3.6 million. What not 3.5? Because you need to go and add this 3.5 with 70 with 30. So do that. 3.5 million plus 100,000. So you will get 3.6 million. Now you need to go and find out what is the accumulated depreciation at the beginning of the year. So you need to find out this one here, accumulated depreciation on 1st of January. So working number one is actually from the your own question itself. So now we are going to do working number two, which is to find the accumulated depreciation at the beginning of the year. So this is the one, working number two. So number one is this. Number two is for you to find out what is the accumulated depreciation from the date of purchase, 1st of January X5, until the date of first revaluation. So that was for 3 years. 3 years, right? So for the date of acquisition to the date of revaluation, so you take 3.6 million. If you have residual value, deduct that. Divided by the estimated useful life, 25 years, and times 10, 3 years. 3 years is the number of years. So you have 432. So that 432 is your accumulated depreciation for the 3 years before revaluation. Your accumulated depreciation for the 3 years before revaluation. After you have done that, this figure here, working two here, is the one that you need to go and include here. How much is the figure just now? It was 3.6. So you need to include here in your item there. So let me just put it here side by side. So I have the one prepared here, right? So you put here. In terms of journal entry, what is the journal entry for that? The journal entry is debit, accumulated, depreciation, and credit the building. Sorry, credit the equipment. So basically, you can do the journal entry, but this is not a requirement here. But if you want, you can do it here. You can put here debit, just for you to take note, debit, accumulated depreciation, credit, equipment. I just put simple journal there. Then you have the carrying amount. Why do you have to calculate carrying amount? Because you need to compare this carrying amount on the date of revaluation with the fair value. So if you compare with the fair value was given in the question 3234. So you can check your question and you can find out how much is that. Here, 3234. Yeah, given in the question, which is the one in the question here, the one in red here. Okay. Okay, I put yellow here. Okay, that yellow, that a green figure there. So after you have compared with this, you can see that fair value exceed the carrying amount, you have a surplus. And that surplus 66,000 is the one that you will debit your equipment and you would credit your ARR equipment. So that is what you do. So when you do this, you debit your equipment. So when you debit your equipment, it will appear here in your revaluation surplus. So it has to show here. So that was working three. And just now, working two, where you have the accumulated depreciation that you eliminate it will be here. So that 432 is actually here, right? And this 66 is actually this 66 here, the surplus. Are you still with me? Right. Now we go to the next part, which is the one that we had here. The accumulated depreciation also appear here. So you notice or not, it appears here as well, because the journal entry just now was debit accumulated depreciation. Debit mean you have to go and reduce the accumulated depreciation. So but before that, at the beginning of the year, the accumulated depreciation that you calculated was 432. This 432 was eliminated. So you have this entry, you have this entry, right? The two entry there, right? Now let's go and look at the uh, next, the following year. So you are done with this. So you have to now calculate what is the charge for the year. So during the year, you have depreciation. And now for the year ended 31st December 20x8, the depreciation will no longer be based on the 3.6 million. It will be based on 3234. 3234, which is the fair value or the revalued amount. So you'll take the revalued amount. Now the remaining useful life is 22 years. Why 22 years? 25 minus 23. So you can take 25 years minus 3, 25 minus 3 years that you have used up, you have 22. So that 22 is the remaining useful life, and then you multiply by 1. Multiply by 1 year depreciation here, annual depreciation. And that will give you the depreciation figure of 147. So that was based on revalued amount 147. Now you are done with that. Next one, you will have to calculate what is the depreciation. You have done that. So debit depreciation, credit accumulated depreciation. That was the journal entry, right? Debit depreciation, credit accumulated depreciation. So when you do this, the accumulated depreciation that you credit will go to the column here. So here, right? And you are done with the first year. So the accumulated depreciation at the end of the year is 147, which is the new depreciation based on the revalued amount. And this is the carrying amount on the first year. So that carrying amount for the amount for the cost of valuation here is at the fair value. So that is transferred here. And the one here, 147, is transferred here because that becomes the following year's balance. So in the second year, you have disposal. So disposal, which is you have the depreciation that you need to calculate, as well as you also need to go and check how much is the gain or loss on that year. And take note that in this year you have your uh, item revalued asset that was being disposed. So we go to the second year. So when was it disposed? You have checked earlier. It was disposed on 31st of December. So when it was disposed on 31st of December, the amount that was disposed for the proceed is 2.95. So therefore, what you need to do is you need to go and first find out what is the carrying amount. Before you find the carrying amount, right? Let me just show you. This is the year ended 31st December. So you come to the following year. In the following year, your revalued amount is this, the one that is from the fair value. However, in that year, you have to go and check that you already have some balance of how much. The one here, 147. 147. 147 is from the previous balance, this one. So that one is already available. So you have to include here. And before disposal, you have to charge depreciation. So here the depreciation for the year ended 31st December 20x9. This is the one 20x8. For 20x9, you charge depreciation again, and that would be the same 147. So if you total out 147 plus 147, you will have 294. And this 294 here, yeah, 294 is actually the accumulated depreciation as at the date of disposal. So you take fair value minus the 294, you get 2793. So this 2793, I transfer here, right? This 2793 is actually your carrying amount on the disposal date, carrying amount. Your carrying amount on disposal date. So therefore, you will compare with the disposal proceed, 2950. But you have this to be included, this section here has to be included where? In your notes on PPE. So let us look at that. So what you dispose is the whole asset. So the whole asset that you dispose will not be the 3.6 million anymore because it was revalued. So it will be the revalued amount that you dispose. So for this 3234, you have to make sure that you include here because that was disposal. So let me just show you. Yeah, this one. Yeah. So you put under disposal. And then you can see the balance here is zero because all the asset that was revalued is disposed of. Before you dispose, you have also provided some depreciation, right? These are the depreciation that you provide. 147. And during the year, there are no revaluations. So what you do is you need to go and remove the accumulated depreciation of the disposed asset, the revalued asset that was disposed. So the total was, how much is that? Just 294. So that 294 is the one in working number 8 just now. So let me just show you the working again. Okay, here. All right. So this what working 8 will be here. So I just put a different color. Right. Okay. So therefore, that is what you have in terms of the notes to the PPE. So you are done with the notes to the PPE, but I'm going to go about talking about revaluation. So the balance at the end of the year, the carrying amount becomes zero. Why zero? Because all the asset that have been with you, which is equipment now, are all being disposed of. So let us look at some journal entry for the revaluation. So revaluation, I'm now doing for the year ended 31st of December 20x9. So number one that you need to do is that you need to go and debit accumulated depreciation and you need to go and credit the asset that you dispose here is, what was it? So let me just check. You have to debit accumulated depreciation, you credit equipment. So we will credit equipment. And you can see that you also have received some money there, debit bank. Debit bank, how much? 2950. So I put here 2950. 2950. Okay. Your equipment that you eliminate is the figure here, which is the one here. 3234, which is the revalued amount because the asset is no longer at cost, it is at revalued amount. And the one that you had is a gain, so I will credit gain on disposal. So gain on disposal was just now 10,000. 10,000. Accumulated depreciation is the yellow figure here, 294. So I take this figure here, 294. At the same time, so that was the journal entry, so 294. All right. All right. So you can see that now you have already done the journal. And you have another entry that you need to do. What is the entry that you need to do? Which is the revaluation surplus realized, which is to transfer Now is to transfer. I'm going to put here transfer of revaluation, reserve balance, reserve balance to retain earnings. So that was the requirement of the MFRS 116. When you dispose your revalued asset, you can go back to the slide that I have shared with you just now. This one, you have to transfer the remaining balance in the ARR back to the retained earnings, right? So you need to do that. So now I'm doing that here. So transfer, when I transfer, I will debit ARR, and this is ARR of equipment, and I will credit where to? Credit to retain earnings or retain profit. Which one? The remaining balance. And the remaining balance, there were no other entry. It was just the item that you have there, revaluation of 66,000. This revaluation surplus balance. So it was there for 2 years. It was there for 2 years. Now you transferred. So this is 66,000. 66,000. So you have extra entry here. And these are the extra entry where you transfer the revaluation reserve balance to retained earnings when on this the recognition of revalued asset. Right, but this the one here that I show here is the one that you have learned from your earlier parts. But this is the one that is new today, which is the transfer of revaluation surplus balance. Okay, that was the case there. And at the one that you have under the first revaluation here by right, you should understand this is from here, which is this equipment, right? So this is the one that I transferred, right? I transferred the figure here, right? Okay, that's it. Okay, that's it. I will stop here. I hope that will help you with the recognition of revalued PPE, and you can go through this again and see and put the workings properly like this so that you can have a better organization of your answer. Do your workings, but your working should be don't write all the full words here, just write short form. But this is for presentation purpose, so that is done as such. Okay, that's it. I'll see you when I will see you.